Hi, and welcome again to the CDFM study group. My name is Helen Thomas. Today we're going to be covering CDFM Module 3, which is Accounting and Finance. And we're going to be covering the finance portion of that. So competency area number 2, which is finance. So let's turn to page 3.2.5 and look at the major functions of finance. There are 4 major functions listed at the top of the page: entitlements, payments, collections, and control of public funds. And so learn them in that order. So it's EPCC. EPCC. Entitlements, we want to make sure that the individual is entitled to that particular pay. And as financial managers, we're not just budget analysts and all we need to know is resource management. We also need to know the finance side of the house. And so that's what we're going to be focusing on for this portion of the study group. So the entitlement piece, and we're going to look at each one of those shortly, is just ensuring, according to the regulation, that let's say for a basic allowance for housing, that the individual is married, they have a marriage certificate or whatever it is. So we're verifying the entitlement. And then their payments, we're also having to certify their payments. Collection, if they owe or an individual owes the government money, we also can collect those fundings. And then finally, control of public funds. If I'm a dispersing officer, cashier, there are responsibilities that we have to safeguard those funds. So on page 5, those 4 functions are listed there. And it also tells you, since it's a certified defense financial manager exam, is that it's important to know which organization in defense in DOD is responsible for finance. And for the finance and accounting, it's DFAS, Defense Finance and Accounting Service. So make sure that we know that DFAS is the principal DOD agency responsible for DOD finance, since we're focusing there. If you look over on page 3.2.6, it gives you the various chapters of the DOD FMR, Department of Defense Financial Management Regulation. What I want to point out on page 6, even if you don't remember all the volumes, levels, and what they're for, ensure that you know that the DOD Financial Manager Regulation is covered in DOD 7000.14R. If nothing else, that's the only DOD 7000 you're going to need to know. Make sure you know it's 0.14R, because ways we have seen it, and I've talked to other students that they've seen it on the test, is they'll give you the DOD regulation responsible for this covering finance and accounting is DOD FMR 7000.12R, 0.13R, 0.14R, 0.15R, or something similar to that. So it's 0.14R. You can review the volumes, but if you don't remember each individual volume, at least know the regulation. Let's look on page 8, 3.2.8. So the first function of finance, we said the acronym was EPCC, entitlement. So the first step of the entitlement process is entitling, authorization, voucher preparation, and certification. So that's the steps that we go through to ensure that a person is first entitled. So entitling is legally establishing the benefit to that individual. So if they say, hey, I'm entitled to basic allowance for housing, BAH, then entitling, we need to first know what authorizing document do you have to show that you are authorized. So let's see what it says for entitling. It's legally establishing benefits to any person. So for example, travel pay. If they say, hey, I'm supposed to get travel pay for X, Y, or Z, and I didn't get paid, then we got to go through entitlement. Do they have orders? Authorization, there are several types of authorizing documents. So do they have a travel order? Do they have a marriage certificate for BAH? Or if they say they're entitled to travel pay. Then we create the document. So that's your vouchers, voucher preparation. And you can read through that on page 8, page 9. There are 5 elements required on a voucher that's listed on the middle of page 9. The date, the heading, accounting classification, the amount to disperse, how you're going to pay them, check, electronic funds transfer, and the name of the payee. Very self-explanatory, so just kind of read through that list. And finally, whenever we get ready to make a payment, the individual who does the research, the input, then you have someone senior to them or a certifying official is the one that will actually certify the payment, and they will satisfy and sign off on those payment before it can be paid out. So on page 10 and 11, it goes into the certification. So certification equals, now we have accountability and liability. So certification equals accountability and liability, because as financial managers, we are, especially your certifying officials, your dispersing officers, as accountable officials, we are held liable. So when we certify a payment, if that payment is then found incorrect, and whether it's due to error or whatever it is, we may be found liable to pay back the government for that erroneous payment. So we have to be very careful when we're certifying and validating and checking our data to ensure that everything is correct. So page 11 goes into the 3 types of accountable individuals, and this was also covered in module 3.1, the fiscal law portion. We talk about departmental accountable officials, the DAOs, certifying officers. You certify that you're using the right purpose, time, and amount, or dispersing officer. I'm certifying specifically for the dollar amount, that you're authorized the dollar amount. That's the correct, exact dollar amount that's to be paid. Then once I certify as a dispersing officer, I'm the one that actually touched the funding. So I got to be very careful because I have pecuniary liability. Certifying officers typically have fiduciary liability, which was covered in the fiscal law, the first portion of this. And your dispersing officers, the ones who actually okay and certified to disperse the money, has pecuniary liability, meaning they have to pay back the money if there's an error. So ensure that's pecuniary liability is also covered on page 3.2.12, where it talks about advance decision. So because we can be held legally liable for these payments, we can also, if we're not sure about a payment, it's recommended that we get advance decision. So whoever our higher individuals are, our G8, our resource managers, we can let them know what it is that we're trying to pay out, what we're trying to do, that we're not comfortable, this is why. Then they can give you some type of certifying document that authorizes that payment, where you can attach with that packet to show that you had advance decision for someone higher than you to say that it was okay for you to make the payment. Page 13 goes into improper payments and how we can recover those. So I'm not going to focus so much on that. On page 14, 3.2.14, it talks about certifying military pay. The key here is just to remember our military individuals are paid on a 30-day month cycle versus our civilians, and we'll look at the civilians in a little bit. So far as the military go, 30-day is their pay period every 30 days. So even if the month has 28 days, they still get paid on a 30-day basis. If the month has 31 days, they still get paid on a 30 days. Some get special pays that's listed there on page 14. Page 15 looks at some of the military entitlements. So they get leave just like we do. Allowances, it goes into the definition of each. Ensure that you know the definition of subsistence, quarters, for clothing allowance, personal allowance, and what each one represents. If you also notice on page 15 when it talks about leave, military members are entitled to 30 days of leave per year. Acknowledging that, because again, not everybody is in the military or have been in the military and may not be familiar with this concept. So those are the kind of things you want to read through, such as clothing allowance. Officers get a one-time clothing allowance when they first become an officer. They can get a clothing allowance not more than $400, whereas enlisted members, every anniversary of the time when they came into the military, they get a certain amount for clothing allowance. So just kind of know what's the nuances, what's the differences between those. So read through those. On page 3.2.16, it talks about some certifying military pay allotments. So with these allotments, it tells you discretionary allotments. Those are the allotments that I pick, that you would select. So you can select up to 6 discretionary allotments. That means, okay, I went and bought a car and I want them to take the money directly out of my check. So I set up direct deposit. That's a discretionary allotment. The non-discretionary allotments says it can be unlimited. Of course, if all your paycheck goes, then we have an issue. So those non-discretionary allotments are such thing as child support, where you had no control, you didn't start it, they found you, and they start taking money out your check. Non-discretionary is also for your life insurance, for like your dental, and those little things that they take, the money out of your check automatically that you didn't actually go start yourself. Those are non-discretionary allotments. And those terms are the same exact terms as the way how the budget is broken down. It's broken down into non-discretionary, mandatory things we have to pay for, and then it's broken, the other half is discretionary, the rest of the budget. So you can kind of see how these topics interrelate. All right, on page 17, let's look at our civilian pay entitlement. Now we're going to look at our civilian personnel. All right, so our civilian pay entitlements on page 17. Work hours. So civilians are paid, we have 26 pay periods per year, or which equates to 52 weeks within that year. So each year, 26 pay period, because we get paid every 2 weeks regardless. It's not the 1st and the 15th. It's not on a 30-day cycle. It's every 26 pay periods per year. Premium pay are those extra overtime, holiday pay, whatever. Those are premium payments. And overtime pay, yeah, I don't think too many people get overtime unless you're mission essential, whatever type of position you're in. On page 18, it looks at our leave hours. So there's, on the civilian side, there are various leave hours that we can utilize. So when you look at the Family Friendly Leave Act, allows employees to use their sick leave to provide care for a family member. And an employee may use up to 104 hours of their sick leave to stay home and help a family member. So even if that actual employee is not sick, they are authorized to take 104 hours of sick leave. You also have the Federal Employees Leave Sharing Amendment. So we can share leave. We can transfer while you're in service. You can transfer leave from one individual to another. But the key here, when you read through the leave sharing, it states that leave donors may not contribute directly to an immediate supervisor. So if that supervisor, and where I've seen these instances is if you have an employee that's sick quite often for whatever ailment, so they've used up or almost used up the majority of their own personal leave. If you have extra leave and you want to donate for that individual so they can stay home and still get their treatment and still work from home, then you can donate your leave. It talks about excused absences, bone marrow or organ donor leave. So we have different type. Leave without pay, meaning we are authorized to still keep our job, and for a specific amount of period, we can still be authorized leave without pay. And then the final leave on the top of page 3.2.19 is the Family and Medical Leave Act. Provides up to 12 work weeks of job protected unpaid leave. So I have 12 work weeks in any 12-month period. So the birth and care of an employee's newborn. If I have a newborn individual, I want to still keep my job, but I want to also stay home with my newborn. I can use up 12 work weeks where I don't get paid during that time, but I also do not lose my job. So that's what we're saying there. At the bottom of page 19 looks at internal controls for civilian pay. It states that the separation is required between all employees involved, certifying time and attendance, compiling payroll, recording payroll data. So again, everything has to be in writing. So establishment and control, how you control of your employee pay records. It seems ridiculous, but if you look at the last sentence on the bottom of page 19, it states civilian pay records are retained for 56 years. So that's an essential or an important number to know. So 56 years, civilian pay records. So the question you will ask yourself, and I don't know if it's stated when we talked about the military, it didn't necessarily state that. So that may be something you can research, or I haven't heard that question was asked, but typically if they compare military versus civilian, then the next question you want to ask yourself, well, if you keep the civilian pay records for 56 years, do we also? And I'm not sure about that right now because I don't remember seeing that. So that may be something to follow up later on. All right, let's look on page 3.2.21. One that we're quite familiar with, travel entitlement. That's our temporary travel or permanent travel, TDY versus PCS. So payments for travel entitlement is covered in DoD FMR volume number 9. So as you know, the first requirement of any travel is that travel itinerary must be prepared on a travel order. The travel order number is listed on the bottom of page 21 under Travel Orders Authorization. It's the DD Form 1610. For those who've been around the military for a while, we used to actually have the paper copy of the 1610, whereas now we utilize the DTS system. So know the form number, DD Form 1610. On page 22, it talks about the travel card, travel check programs, travel claims. We got to, after the completion of official travel or every 30 days. So if you're going TDY an extended period of time over 30 days, you're required to file your periodic claims every 30 days. PCS travel. And if you notice, a lot of information here. So even though I'm going through quite quickly, you still want to slow down and read everything. So with TDY claims, we talked about that. Permanent duty travel, PCS. The key here with civilian travel. So permanent duty travel involves permanent movement of military or civilian employees. So the rule is the same, either CONUS or OCONUS, overseas or stateside, referred to as permanent duty travel or permanent change of station. PCS travel orders. So you have to have orders. what you want to follow, the last sentence in that paragraph on the bottom of 22. All costs associated with a civilian permanent duty travel move are normally charged to the appropriation of the gaining activity. Exceptions to the rule that the gaining activity pays and is listed at the bottom. So RIF, reduction in force, meaning that installation or that base is closing, so you have to move. So there are different instances. So that losing one pays you. If you're coming from overseas, coming stateside, your losing organization pays. So ensure that you get that concept within the same DoD component, RIF, transfer. So that last bullet, that's saying from OCONUS to CONUS, that's the exception where the gaining activity pays. So when you're coming from overseas to stateside civilians, the losing organization pays for your travel. If you're going stateside to stateside, your gaining organization pays for your travel. And the reason you're separating the military, because the military individuals are covered under their MILPER. But for us, there's a different breakdown for the cost. So all of that was still under entitlement. On page 23, it goes into payments, and it starts with payments to vendors. Vendors, another word for that is our contractors. Advance payments, payment package, special conditions, and the Prompt Payment Act. That's the law that governs how quickly we need to pay these bills before the government starts incurring interest payments that it has to pay to this contractor. So depending on the terms of the contract. So payments to vendors, 24 goes into the packet. 25 looks at the ways in which the special conditions are listed for the payments to vendors. Fast pay versus pay and confirm versus a constructive acceptance. So it's considered to take place on the prompt payments rule when the acceptance documents had not been received. So the individual receiving the items, you have the invoice, but the individual receiving the item have not submitted their acceptance document. You have to have all the contract, the receiving document, and the invoice from the contractor or the vendor. The Prompt Payment Act is listed on page 26. The bottom line states that if the government does not pay their bills within 30 days of receiving that invoice, then they start incurring interest after that 30th day. Page 27 looks at the net pay due date calculation. So I have received feedback from some of the individuals who recently took this exam, and they had to actually calculate the due date. So pay close attention to page 27 to ensure that you can follow the steps in how you do the calculations. On page 29, it talks about dispersing authority. With everything that we do as financial managers, we have to have the authority in writing. So whether it's budget authority based on the Appropriation Act or the Authorization Act, or contract authority like a KO has the authority to write contracts, there's some type of authority that we have. I want to also point out on page 29 that U.S. Code, again, that's a law. So under Title 10, the DoD has the authority to establish offices to develop or establish dispersing functions. So the majority of everything that the Department of Defense does is covered under Title 10 for the military individuals. For your civilian, it's Title 5 U.S. Code. If you're a National Guard, it's Title 32. So those are some of the recurring things. You may or may not see them in the course material, but those are expected information that each financial manager should know. Title 10 for your active military and reserve. Title 32 for your National Guard, and Title 5 for your civilian personnel. That just means that's the law that governs how we operate. So there's a law and rule for everything. On page 30, it talks again about DFAS. So DFAS is the senior authority at the DoD, Department of Defense, that deals with our finance and accounting. It talks about the dispersing station symbol number. For most of us, we're familiar with saying, oh, your DSSN. So that is the dispersing number associated with that finance office that says this number belongs to this finance office. So whatever document is pushed out from that finance office will have that DSSN on it. All right, so page 31 is another one I have a note where I was told by a lot of the feedback from the students who took the Module 3 exam is make sure you know the 5 types of disbursements of government funds, different ways in which we can make these payments out of the Treasury. Electronic funds transfer, which most of us are familiar with. Treasury checks, we may get some of those. Large disbursements, dispersing payment systems, and miscellaneous systems. So you can review that from page 31, 32, and make sure you understand it. The e-commerce, electronic commerce on page 33. Again, it's just meaning we do financial transaction by utilizing these technological advances. Electronic document access, EDA, electronic data interchange, and electronic funds transfer. All right, let's move over to page 3.2.35. That is the third function of finance, which is collection. So EP, entitlement, payment, collections. So collections is individuals owe the government money, and we are responsible for collecting those funds. So what you're going to be looking at here are the various types of collection documents. So in the first bullet there on page 35, receipts are collections credible to the Treasury Department, miscellaneous receipt account. So let's say cash collection voucher, which is a DD form 1131. Let's say an individual has military gear. Let's say a helmet. The individual loses that helmet, and now they're responsible for paying the government back for that helmet. So they come into the finance office, and whatever the calculated rate is for that helmet, that individual will be required to complete a cash collection voucher, DD form 1131, to collect and recoup that money out of the individual's check. The key here, it doesn't matter what organization, what CIF that individual got the gear from. When you collect money on a cash collection voucher, that money is deposited into the miscellaneous account at the Treasury. So it can't be that that installation doesn't get to keep the money. It's the bottom line what I'm saying. So you end up losing, and when they take the document back to the organization, they then have to reduce their accountability, because now it's not like they go out and buy another helmet because they've lost that money. So even though the person paid for it, the money does not go back directly into that organization. So reimbursement, again, it talks about the DD form 1131 and refunds, and you can read through those. Collection systems are listed on page 36. The IPAC and the goals, you can read through those. And page 38, debt collection. So let's say individual was overpaid. Basic allowance for housing is always a good one with finance. And now they've incurred a debt because now we realize that they owe the government money, and we have to do debt collection. So collection of a debt owed by a current military member or a current civilian employee. It means that money is going to be taken out of your current check. The second bullet on the bottom of page 38, collection of a debt owed by a former military or a former civilian employee These types of collection actions must be handled in one of several ways. So any former military, I'm on the top of page 39, or former civilian who owes monies to DOD shall be sent one letter that explains how much is owed and why, and given the opportunity to repay the amount owed. If such actions are unsuccessful, the matter should be referred to DFAS Indy to recoup for whatever check, whether it's a retirement check, whatever check you're getting, or it eventually may be referred to the IRS as stated on page 39. Under U.S. Code Title 31, Money and Finance, Chapter 37, they can then authorize IRS to recoup that money out of your income tax. So referral to other federal agencies. So there are different ways to collect a debt. The steps involved in debt collection from a vendor. You can look at the slide on page 39, then it's going to go into detail a little bit later on. Notification by letter, got to be in writing. Collection by the disbursing officer, collection by the contracting officer, debts delinquent 180 days, delinquent debts under $600, above $600, and debts that are referred to the Treasury. So notification demand is DOD policy that only one demand letter is required. So they don't have to, like civilian, where they keep sending you a letter, say, hey, you owe this money, you need to pay it back. So one within issued at a 30-day interval after the date of the initial demand. Collection of debts by disbursing officer is responsible to make payments under contract. So those you can read through. The only thing that I'll point out on page 40, when it talks about debts delinquent for 180 days, if the debt is under $600, the account may be written off, or that debt may be written off or zeroed out. If the delinquent debt is $600 or greater, valid and legally enforceable debts equal to and greater 600 and multiple debts equal to or greater than 600, you got more than one that equates to more than 600, will be referred to the debt management office, and then they will deal with it from there. Referral of debts to the Department of the Treasury. So valid and legally enforceable debts over 180 days, which is what, 6 months, shall be referred to the Department of Treasury to collection. So DOD components that do not refer such debts to DMO will negotiate agreement with the Treasury for referral of delinquent debts for 180-day old for collection assistance. And then there's always the do not pay list. That's the list we have of individuals who we will not pay for whatever reason. So that is the third function of finance. So the final function of finance is on page 41, which is control of public funds. And we're going to look at that in a minute. All right, so control of public funds, access to and accountability for resources. Access to the resources and records should be limited to authorized personnel. So the bottom line is, when it comes to finance and the money and even the records, we have to safeguard those records, because a record equates to money for accountability. So it's kind of one of those need to know. So the pecuniary liability that's associated with the funds means that each dispersing officer and any person under the DO is entrusted the funds must be provided with a separate container, safe. So safeguarding. At least semi-annually, the DO shall make an inspection and maintain a record of inspection. You got to, just like with anything, we got to keep a log of when we inspect our operation, inspect our safety of our financial records and our financial systems. Let's look over on page 42, dispersing officer account. So if our account is out of balance, check issue overdraft or underdraft. Let's look at that. So out of balance simply means that when we settled our accounts, we either had a loss or for some reason we have an overage. In our business, neither is good. So you might say, oh, well, I should only have $50, but now I have $100. Well, in our business, it means that we did not do our job properly. So we're not trying to gain a profit. So we need to find out, why do I have an overage? So out of balance. The term describes any irregularity in the financial accountability of the DO. Either way. So these irregularities are categorized as physical losses of funds or an overage. So we have to report those. So physical loss by major loss. So $750 or more is considered a major loss or more, or any loss involving fraud, and minor loss less than. So it's a minor loss if it's less than $750, but if it includes fraud, we got to report it. Major loss is any amount greater than 750, equal to or greater than 750. Check issue overdraft. The situation occurs when the amount of the check is greater than the amount reported by the dispersing office. Something doesn't match. Underdraft, it wasn't enough. That as far as our records don't match what was dispersed. Delivery of checks on page 43. You have undeliverable checks, and it talks about that 60-day period of they'll keep trying to resend the check, and if it's not issued or cashed, then they'll eventually cancel that check after some time. So read through those bullets where it talks about spoil check. That means, okay, like we were deployed, if you had blood on the check, if you got a lot of dirt, mud, you can't really read the numbers properly, those are considered spoiled checks. The Borrowing Act is a law that requires the government to receive claim within 6 years from the time a claim accrues. So that's the Borrowing Act at the bottom of 43. A lot of these things, if you don't really pay attention, you can overlook them. So make sure you know the Borrowing Act at the bottom of 3.2.43, and that is the law that requires the government to receive and accept a claim within 6 years of receiving that request. The different forms used in finance are listed in page 44 and 45. Dispersing officer reporting. So our daily accountability is the DD form 2657. And if you've been a dispersing officer, you are familiar with a lot of these. But it might be a refresher for some, and some it may be brand new. So what you want to do when you look at a list of 6 is, okay, you have a couple of daily forms. You got the daily statement of accountability. So that's like your daily check statements. Daily agent accountability. So your agent is like your dispersing agent. Those are individuals that have larger sums of money that fall under the dispersing officer's accountability. Statement of accountability, SF 1219. Ensure that you know the definition, the form number, and what that form is used for. So it's covered on page 3.2.44 over 245. And finally, at the bottom of the last paragraph on page 45 talks about record maintenance. So again, how long do we keep finance data? We talked about how long we keep the civilian data, civilian pay data for that 56 years. But when it comes to that finance, look on page 45, and I'll read that last paragraph under record maintenance. Dispersing officers, that's what the DO means. Every time you see an acronym, make sure you know what it stands for, because what they'll do on the exam is they'll still use DO, but their definition or their explanation may not be dispersing officer. Or like we talked about the CG, that's for us, it's the Comptroller General. But if you don't pay attention, most people will say Commanding General. But when it comes to the budget and finance, we're not concerned with the commanding general. We're concerned with the Comptroller General, who is the individual in charge of the Government Accountability Office, the GAO. So let me continue to read. So copies of vouchers, books, records, and any other associated paper that we use for our finance, government property readily accessible to the DO for a period of not less than 6 years and 3 months. Make sure you know 6 years and 3 months to keep our financial records. Additionally, it reminds us that this applies to all records except payroll, which, as stated previously, are retained for 56 years. So if it's payroll related, and I think it might be the same for the military, I'm not sure. Like I said, I have to research that because it specifically said civilian payroll is maintained for 56 years and any other financial data is maintained for 6 years and 3 months. So this concludes the review of CDFM Module 3.2, which is entitled Finance. Thank you, and I'll see you again next time.